So we have Chase Bank, cue the fire. Also, we have JP Morgan. Also, my apologies. Elevator's still broken. Probably 7 more days till I get that thing fixed. Plus, I said cue the fire. That works. But Chase is freezing accounts, which I will show you. And I bank there too. So I get it. Well, that's where my money is not, but I bank there, which probably would confuse most people. But that's just kind of how the system is. That's where I bank, but then all of my assets are in other locations that I can access through Chase. Oh, and coming in from other banks, JP Morgan, they see a default risk a-coming. 2.8 trillion, which I will show you. And it's not 2.8 trillion that might happen. It's 2.8 trillion of missed payments that happened right now. We're also going to talk consumer foreclosures because I have scripts. Well, it's not scripts. I have show notes. So I stick to it rather than, oh, hey, there's a squirrel. Bankruptcies, delinquencies, and can I throw in a little fire on this one? Mad Max scenarios. You're going to want to stick around for this. And how about hit the like button right now? Otherwise, you might forget. And I know it gets a little juicy up in here. And that happens to me too. I always forget, and then it's over, and then I end up hitting the like on the next video. So if you could, much appreciated, or definitely share. Share, that's the money. That's the gold. If you want to click that button, you could skip all the rest. Rest. Come on, finish. Swallow. Pronunciate. JP Morgan sees vicious cycle. So does Johnny Bravo. As top China trust misses payment, it's only 3 trillion. And guess where this is all located? Oh, if you're guessing commercial real estate, ding ding ding, you win. This is what we're talking, which is the largest asset bubble in the history of time. And we're talking China, we're talking the United States, but we're fine over here. We're not going to miss any payments. Well, I don't see those commercial buildings filling up anytime ever. But also, what happens in China, it's not like Las Vegas. It doesn't stay in Las Vegas. It comes over here. From deflation to whatever they want to send us, to the products that you buy and use. But about 2.8 trillion yuan trust assets face default risk. No, they're doing it now. JP Morgan, JPM, banks' risks may rise as they may be asked to fund the gap. And I don't see that happening here, and I do not see that happening in China. But if you want to sugarcoat it, you sugarcoat it. Bloomberg missed payments on multiple high-yield investment products. Wonder what those are. By major Chinese shadow lenders. I know what a shadow lender is. May trigger a vicious cycle. We'll get there. That's going to be Mad Max. For property developers. Oh, you guys are not developing any new properties? Financing and more delinquencies for trust products, JP Morgan Chase warns. And then coming in from that word, we just keep seeing liquidity. What's liquidity? Well, our government will fix that for you. You just have to pay it back in your taxes. Oh, and by the way, boy, do they just gobble these things up. Those bonds, right? 10-year, one month T-bills, 30-year. You would think, right? Because everyone's like, oh, you wait until all this debt is dumped on the market. No one's going to touch that toxic stuff. And everyone touches it. And everyone needs liquidity. And they don't got it. So the United States of America gets to supply the liquidity for the entire world. But you get to pay it back in your taxes. Isn't that sweet? I love it. World reserve currency. We'll take that. Liquidity stress is intensifying. Well, I thought we were flooded with liquidity for indebted developers and their non-bank creditors after a unit of, I don't know, that starts with the Z Enterprise Group, one of China's largest private wealth managers, failed. They didn't do it. They didn't pay it. Failed to deliver their payment. Checks in the mail, I promise, for multiple products. Oh, but this is just a one-off, I'm sure. The U.S. bank analysts, including Catherine Lee, wrote in a report on Monday. And then coming in from what is going to happen, the trust may set off a vicious cycle. It's dominoes. It's going to be fun. If you guys like playing dominoes, you're going to see a lot of them. Privately owned enterprise developers onshore debt. The analyst wrote, quote, this follows the rising concern of developer defaults weakens investment sentiment, and as a result, trust companies may not be able to or willing to roll over existing real estate-related products. And that's what you are seeing here. And when it's due and they're like, wait, what's the rate? It's 10%, and we were just paying 3%. I think we'll go ahead and hand that back to the banks. And then a word you're going to be seeing a lot of, that would be this one, default, imminent default, because that's how the cookie crumbles. Coming in from JP Morgan, quote, the probability of banking bailout trust investors is low in our view. Yep, just let them all die. But honestly, I think JP Morgan has enough problems in their own backyard, like 99 with a lot of commas, but this ain't one. 99 billion problems. This is what they're doing to your accounts. Withdrawal goes viral as JP Morgan Chase accused of initiating massive transaction and freezing bank account. You're like, well, I would love to have 99 billions. Well, it's opposite of that. It's like it just went into overdraft. I think we all know what that feels like, right? You're like, wait, what? I thought I had enough. I think they had like $3 or $4 grand. Your account is overdrawn. So call Chase. They'll handle this $99 billion problem. That is crazy. Present balance, $3,625. So if it's not one problem in the banking system, it looks like there's a few more billion. But it's okay, Bravo. I don't have any money in the bank anyways. I just run on overdraft. They owe me. No, they don't. I owe them, and they're not getting it. This reminds me, it's in the stock market. It's all in the stock market, Bravo. I'm fine. This reminds me a lot of 1999 to 2000, an investment chief. This is for those of you that are dabbling in that stock market, because this is what I like to do. He warns of a recession, which is not going to happen. If Biden can have his way, no recession here is right around the corner. Actually, he probably could pull that off. You want to know how to do it? Give people stimmies. What that will actually do is GDP will go up and you will avoid a recession. Well, until you don't. You just kind of kick the can a little bit, which if you've been on this earth for the last 100 years or your lifetime, you know that's just what they do. But they're warning of a recession right around the corner, which I would say we're in one right now, but it's okay. Despite overboard bullish sentiment, because you guys are like, look at the stock market. If the stock market's up, everything's good. That should not be the pulse that you use on whether or not the world burns. Because remember, we had a sitting president, okay, Kennedy. He died of, I think it was lead poisoning in the back of a vehicle, and it was caught on tape. The stock market, sitting president dies. Stock market goes up that week. Right? I'm telling you, the beauty pageant or the cheerleaders that run the show, they don't care. They don't know. Just always do whatever is the opposite. But anyways, this Market Insider, this guy's going to give you 3 of the best ways to protect your portfolio from this fallout. And I say, without even reading the story, I am going to say you're probably wrong, because it's like they're like, you need to invest, buy and hold in this. So let's see what they have. And let me scroll past this Getty image of an AI-driven. What is that? Okay, font. More font. Okay. Give me the 3. What's the 3 ways to protect? Here we are. Oh, and he's talking about the VIX. Look at that. Okay. Give it to me. Just go for whatever is, it's like reading. You know, you just go whatever, bold font. Okay. Or you look for 1, 2, 3. Let's see. Bullish on fixed income. Okay. I'll give it to you. Value-oriented companies. Like, come on. Are you guys Googling value-oriented? No. You got to trade this stuff. And small and mid-cap stocks. Bonds. Oh, my goodness gracious. They said it. Bonds are an obvious choice for safe, steady income. Really? Really? Late cycle environment? Go. That does not mean go long, TLT. Hey, that's what I did during a tightening cycle. Yeah, I missed a marble. But I will agree, you buy the bond, okay? You buy a T-bill. You call up Chase Bank and you're like, I would love a 1 month. The risk, 1 month. That's it. You think everything's going to hell in a handbasket in a month? Giving me 5.5%, I will take that. You go out to the longer dated, it actually comes down. which means the bond market, the $1 trillion bond market, the globe, which is 4 or 5 times bigger than the stock market, is telling you you have hell to pay. It's all going to come collapsing, because if you go farther out in the curve, which it's down, it's like, oh, it's going to be really bad. You should probably, lock it in now for a month, because that's all we're giving you. Because over time, you're coming down. That's when I say to you, be careful of your beauty pageant, because it's going to follow suit. And the macro is also telling you this too. The current macro, the micro. Consumer spending slows. Is that good for an economy or bad? I'm going to go with bad. How did we know about this? Well, Johnny Bravo, because you subscribed, came on here and said China ain't making the products anymore. They're not. They've slowed. They slowed months ago. Possible recession. Germany, recession. Everyone, recession. But we're like, but NVIDIA went up today, so I think everything's fine. Consumer spending slows, putting the rest of year at risk for retailers, which I've been saying that would be recession, right? Retail, inventories gone. China, not sending anything. Baltic Sea, dry index is dry. So I sit here as not an economist, but as just a normal dude going, this is probably going to get bad. Now, they could fix it. Biden could come out and do the 2023 stimulus package, and it could come in the form of like different things, just to get those bonds into your pocket, because Janet be going burr. And also this time around, can you do me a favor? The money you get, can you just not shovel it into Bitcoin at 69,000? Now it's at 29,000? Yes, probably, but I don't know. That's just what YouTubers said. Guys, that is why. That is the one reason why I'm like, hey, you want to know how to trade this stuff? Also, there was a technical glitch. You guys were emailing me. You tried to get my CSU course, crypto and stocks. This is more advanced, okay, than my swing trading. I did it for $100. It was one day. But then I got emails saying it wasn't working. Well, that the $100 wasn't working, and you're like, it's just says 1,000. So I fixed the glitch. You can actually get it now. My apologies. $100 today. That's it. It's gone. How to technical trade crypto. Also how to trade. It's like the technical pattern stuff. That's why I called it university, CSU, like the place that I teach at. Well, not currently, because I don't want to. But also at the end of the day, just follow the charts. Don't follow, like, for example, the NASDAQ and Bitcoin were correlated. Not inversely, they were actually correlated for quite some time. Well, that correlation stopped. But what didn't stop was, Bitcoin should have, here, look, let me show you. Here's Bitcoin, right here. That's it. That was your pump. Here's the NASDAQ. Here, there was your pump. Almost, look at that, almost all-time highs. I mean, Bitcoin should have cleared 100,000. But, follow the charts. Actually, I'm kind of curious. Let me turn on my link in the description if you want to know my charting software. What's going on with Bitcoin anyways? Oh, wow. Look at that. It's a symmetrical triangle. Whoa, it's a coil in there, kids. And you're above the reactor? Goody gumdrops. You want to know if that thing breaks, where it's going to go? Well, I'll show you. It's either going to break up here and reach all-time highs, or it's going to break there and reach off the chart. So, hey, kids, maybe before this halving, that's that green line, you'll get your wish. But also coming in for more financial news, because you guys like financial news. The U.S. is facing a debt storm. Well, okay, which one? Is it the government? Because they seem to make as much debt as humanly possible, and everyone keeps gobbling it up. Now, if it's you, well, then, that's definitely a hellstorm. Here's five charts that show trouble is brewing. 10-year Treasury yield, like that one. Well, let's cut through all the font. Let's see what's going on. Private debt levels are rising at a staggering pace. That is a problem because that's you. That's private debt levels. There's going to be a reckoning. Corporate defaults are surging. I've showed you that. 3, late payments are piling up. Yes. Coupled with your savings account, banks want to dump risky debt. Yes, they are. And the banks are actually holding a hell of a lot of risky debt because it has to do with commercial-backed real estate. But hey, if you want it, go get yourself some of that. But now coming in from the Mad Max Scenarios, Greg Hunter. I miss Greg. Greg used to be on YouTube. He was USA Watchdog. He was our watchdog. And Google felt that, the whole watchdog thing and telling the truth, sorry, we're going to have to let you go. So he got booted. So he's now USAWatchdog.com. Had Bill on full faith and credit of a bankrupt insolvent. They don't have any money. Government. True. Well, but for how long? I mean, even the first sentence. Okay, precious metals. You guys know how I feel about that. If you want if you want money, fine. Have your money. Gold, silver. That's fine. Bitcoin, that's up to you. Just know it's volatile and volatile. Precious metals expert, and that's also their narrative too. Like everything, we all die, the world burns, make sure you have gold and silver, which I say is great. I love it. But you can also probably do a lot better by buying high, sell low, or buy low, sell high. That one's better. Don't do the first one. That's what most people do. Says there's a long list of financial trouble coming to America sooner than later. There's the commercial real estate implosion. Check. Rising interest rates. Check. An exploding federal budget. Check. It doesn't matter, but it matters when it does. Same thing with owning precious metals. When it happens, but is it in your lifetime? I don't know. And we have the unpayable debt, monster unpayable debt. Yes, we are supplying the entire world for liquidity. That's what we do. And then me as a corporation, I have to come in and fix it. Or it's receipts. It's raise your taxes. So they got to get it from somewhere. Oh, and actually even says it right there, tax receipts. Yes. So again, for how long? I don't know. All I know is yes, Bill, Greg, you guys are all right. Everyone is right. Everyone that tries to say, link in the description for my precious metals, you're right. It's just when. I don't know. But right now they use Fugazi. You go into a bank, I want $1 trillion. Bank doesn't have anything in it. They write out on a sheet of paper, give you $1 trillion, poof, $1 trillion right out of thin air. And then on the flip side, the government goes, hey, let's create bonds right out of thin air. Same thing. And then they use your Fugazi to buy it. Crazy system, right? But this is the system we live in. How long is it going to last? I don't know. Just call up your politician. Maybe they know. Maybe Joey B knows. But what I do know is consumer foreclosures, bankruptcies, delinquencies, and collections are all going up. Well, actually, 340%, I think, year over year. But you weren't allowed to foreclose. I mean, so sure, anything above zero is definitely pretty big. Delinquency, 30 plus days. Can I move? I got to move. Okay, I moved. It's looks like that, the red line. The HELOC, come on. What are you guys doing taking out HELOCs? That's such an 07 thing. I actually did have a HELOC. I had a lot of cash. I exited out of all the markets in 08, right at the end, October. House, California, blah, blah, blah. Rental, Texas, rental properties, you name it. Stock market, all out. 08, October. That was I put the flag in the ground. And then 2 years ago, I sold in California, put the flag in the ground again, and then moved. But I had all this cash on the side, HELOCs, bank lines of credit, and I was ready to go. And then they closed it all. I was like, wait, I want access to it. What I should have done is I should have used it, to buy gold and silver or whatever, and then use that money to buy more properties. And hopefully, cue the fire. You guys are preparing for the tsunami that's coming. Okay? So you're trading this stuff. You took advantage of the $100. That's insane. If you snap it up today, you're getting it cheaper than when I launched the course. But anywho, you're taking advantage of a down market, an up market, a 5.5% T-bill. Maybe moving your money into gold and silver. That's fine too. When it all breaks. But trade it in the meantime and then wait for it all to break. But like always, I love you guys so much. Thank you for allowing me to work every day of my life, even though I don't have to, giving you the truth that you're probably not going to see in mainstream media. And I will see you tomorrow.